Hey, g'day, Trader Sam here from Trade to Prosper. Today is Monday, the 27th of February 2023, and I'm here to give you another weekly Monday update on my Bitcoin perspective. Looking at on the monthly chart, just have a quick look at that, and we've got a day and a bit, I suppose, to finish this. And when we look at the RSI, which is our probably predominantly main one that will help us out, we are at a point of decision. So you can see if we close bullish there, then we cross this moving average on the RSI. In the past, it did signify a change in trend, early change in trend, and so we're looking at that. If the monthly closes bullish, if we look at the candlestick, let's have a look at that. Come close, you can see the monthly candlestick. Oops, won't do that. You can see the monthly level, ever so close. Oh, come on, give me a break. So the monthly level's there, or the previous month's there, just closed below these ones. And if this closes slightly above, that is very bullish. Basically, we saw that wick for the month, and it's been bought up. Obviously, we're sort of halfway in both directions. So if this was to go above a bit more in the next day and a bit, this is going to be very, very bullish. And that might just tip this RSI above and then kick off the bots. I did say in the past that whenever there was a bearish market, and we had many in the past, what we did find out was, or what we observed, like this capitulation candle, a very bearish candle on the monthly, then there's a bullish candle that kicks off the bull market. Here's a very bearish candle, and then there's a bullish candle. And if you go through the history of crypto, you'll see that there. So let's just clean these. Oh, okay. And if we look at the wave trend indicator, very much similar. If you look at, it's a lagging indicator, but when it crosses over, almost, in the past 10 years, anytime it crossed over, it was a sign of the bull market, or the bottom, or the top. So here there was a bit of confusion, there, but obviously it's a big bearish divergence that took place. But it took a fair bit of time actually to get that going. So just because it crosses over, so we're looking for a crossover. It's not crossed over yet with this column. It's saying it's crossing over, but if the candle closes bearish, then this will undo. So it's at the moment almost confirming that it's going to be bullish. So this is a good sign. It's a lagging indicator, and it doesn't necessarily mean it's just going to pick up. It can go sideways, but this is, from an indicator perspective, it's saying it's good. It's the bottom. The bottom is in. If we look at the past, if you look at this particular area, if we'd had this same scenario where, but see, the thing is, the candles aren't big like what we have now. So in the past, even though that was the bottom, it was up here, and it took many months for it to cross. So same here, that was what we thought was a bottom, took many months to cross. So this is a good sign. Ever so, that green candle was it. That green candle made the crossover. There was a small candle there, so that showed less dropping, but that green candle pretty much confirmed that's the bottom. So we're looking at it the same way. That was prior, this green candle. There's no reason why it can't come down for the month, but I do believe it's going to go up. Now that's a perspective from the candle. So now that's the candle perspective. Let's move on to the next chart. I want to just quickly put this in there. I tweeted it. There is a bit of discrepancy when it comes to the moving averages on certain exchanges. On Binance, the 200 moving average here is that, the 200 moving average. On the weekly is that. and that's the 200 moving average on the weekly is there. So it's very different. One's up there, and then Binance is there. KuCoin's the same. KuCoin's down here. The others are up here. So we have these discrepancies in depending on how it works out. One will be support, one will be resistance. So I thought I'd put that out there as well. And I don't know what to make of it at this point. Now moving on to our main charts. Bitcoin, if you look at our moving averages from this perspective, we have a number of moving averages that are playing a pivotal role. We have one here as support. We have it here on the Binance as resistance, and therefore resistance here. We had a resistance there before. So this line is coming across as resistance. So if we break that, then we're going to be bullish. It could be possible that we just do a double bottom or something like that, get a pullback, and then a break. But I see ourselves consolidating there. So let's just clean that up. We are under this main level, and if you can look at my reference from there to there, it's a 0.302 Fibonacci as well. Where we found support from top to down, it was on the weekly chart. Here's the weekly level as well, and we've broken that second weekly level. However, that is the main. We had the resistance here before, and therefore it makes sense that we're going to have resistance here again. Then our next level is this weekly level here on the 618. So I'll be looking to a failed swing here and looking to short this range, and I'll get into it a bit later on with the next chart. But I just wanted to point those out, that the moving averages along with Fibonacci, here we've got the macro Fibonacci as well. The macro Fibonacci there acted as support for this particular level, and then we had the middle of it, which is a point of control from a volume perspective, was support, and it's equal to the weekly and the monthlies there as well. So this level was a strong level of support. I did mention this in my previous video, that this is the area I'll be interested in jumping in. So there you go. So I did jump in. I jumped in Ethereum more so, and that's it. Now we've got this range, but I do feel like this is going to be a resistance level and potentially a shorting position. Now let's go look at the other chart. Next chart, well, I have my levels all mapped out. So let's look closely. And here are my levels. So from the other perspective, from a volume perspective and all the rest, and that's the weekly 0.382, found our support. We had our two, okay, that was the first sell, so that was a good indicator. This was on, that's index, okay. So this is a swing failure trade, and it broke above, so it's holding above that daily level. Perfect entry, and that's what I jumped in. I jumped in here. And so far, I'm not sure this is any relevance, but if I was to just stretch that out a bit, it could mean that that is our trend line, potentially resistance, but we've got the 618 level as well from the top to the bottom. So we are looking for confluence, maybe some formation, but I don't think this formation is valid. And the 618, I do feel like that we're going to consolidate pretty much like what we did here between these two levels. And if we were to look at this from there to there, okay, the 0.382 got hold of it, and historically this level was support. So it wouldn't be surprise me that we consolidate here and then break up to the upside. The 618 is pretty much the reason why we end the previous support. So we might just, I don't think we should be shorting. But anyway, but when we look at this level, we have a number of levels that we need to consider. And so let's bring out the first scenario. Let's just clean that up. First scenario is this potential move. So this could potentially be a shorting position. However, I don't think it'll be a strong position, but it does give us reasons for this level to be resistance, and it's likely to come down a bit. Once we get there, we've got it's basically the golden ratio level, so it's across the board. We might get a pullback and maybe even test this level before we go up. Here we've got the daily level, another point of control, and this is the area we're looking to short with a swing failure, and see what happens. Now, why am I thinking shorting? Well, from a Wyckoff perspective, we're in a range, and let's see if I had the other chart. I'll bring it out. If this is our accumulation structure, the long-term one, sideways, we are in this phase roughly here, actually here. So we're in this LPS phase where it just is knocking on this resistance level, as you can see, and it's usually volatile. It's not straight. If in some cases it breaks above and then uses this level as support. So if this was to be a decisive move, then we could have done this for a while and then continue on, but we didn't get that. So what we're doing is we spend time here, and most likely it should break up to the upside, and then this area is going to be nasty, could come back down or continue on. So we've got to remember these traps, and those traps are dependent on a few things, like what the other markets are doing. But yeah, I do believe that we're in this LPS phase, and so the volatility is there, but we haven't broken the market structure. So we've still got lower highs. Yep, we've still got lower highs, and we've got higher highs. So as long as we've got that, we're fine. And from a weekly perspective, it makes sense. So the weekly level is there. The other weekly level is there. So our weekly level, even if it's there, it's still a high weekly. So that's a weekly level. Like to see it close above that. And so far it does look like, but we've got a flat top at the moment. But it's knocking, and so we want to close above this weekly level, and that will give us a bullish sign. So when we look at this at the moment, you can see that definitely the weekly level open and closes there. We'll close below it, even close below the 200 moving average. So slightly bearish, but it's acceptable. Long as we don't lose this key level here, which is 21,700. We don't want to see a daily close below that. All right, so that's what we have. And let's go back to the 4-hour. So the market structure is still there, and the moving averages are doing the support. Moving on to this chart. So I'm looking for potential shorting position like that. And next scenario is this one here. So if we do get a position of the pullback, and we did get a rejection at this level, and it comes down, then this next level, somewhere here, especially there, around there, where's my levels? Okay. That is a weekly level there. Excuse me. So somewhere here is another good entry to go along. And if it keeps going, we'll keep going with it. But that is a long position. So if we don't get to that level, but we get a rejection here, come down more further for more where there's more demand and cheaper, then we could probably do that. And it's very possible that we get a rejection and then come back down. Now let's go on to the last possible scenario. Let's see what have we got here. Okay, that's what I got. All right. And then the worst case scenario is this weekly level here. And anything below that, we're stuffed. If we get this does open the doors for a bearish scenario because, and I've mentioned this before, we have some complex structure, and you can see sort of a head and shoulders coming. This level is pretty much the Wyckoff neckline. So we can't, I don't feel comfortable losing that neckline. In the past, if you look at so basically, if this is a reaccumulation structure that I'm looking at, yeah, if that's a reaccumulation structure, this is acceptable. We have our buying climax, and then we got our automatic response. Then this is our UT. So if it comes down here, it's fine. That's our secondary test. Yep. Even I wouldn't be comfortable for it to come below that. So this level here is acceptable, even to this level here. So this gap is still acceptable to go long. And we might just get that potentially because of the interest rates for the next few months. They're anticipating higher rates. So if it's 2 or 3 months, it might just bring it down to this level. And so even if we mess around in this area, we might end up coming down here for the next level. And then we still got the Wyckoff structure intact and then a breakout. So that is a bullish scenario. The bearish scenario is if we lose this level and we come down. Yeah, they expect. So that's another scenario that I've been thinking about. And this level here, let's just give it a sec. If we were to come down, so this does come down past this, and we can't get above it, then it's going to drop. So if we come down past this level, so I'm dictating the levels, and we are knocking on it and we can't get above it, then it's going to definitely revisit this level here. Okay, so we have this scenario, the bearish scenario, where this could be a shorting position or shorting position. I like to see it higher because then you've got less risk. And now stop loss is up there, just above those. So if this was to come up, I do feel like that's going to be a good position to short and then come back down, and that's pretty much a double or triple top. And then we'll see what happens after that. But there will be a rejection, I think. But it really depends on how it gets there, not just getting there. How it gets there makes a difference. Right, so next chart. Here's my all-out Fibonacci chart. I just did Fibonacci's non-stop, and I just come to this once in a while. I don't use it to trade. I just see the confluence in it. And if you look at it, everything has a pivot point, and it does work. So I just extended this this was somewhere around here before, so I just extended it, and funny enough, so this purple one, that's from there to there, 0, 1, and you can see the 1.414 was acting as resistance, and then we got to the 1.618 acting as resistance, and you can see the 1.272 level, and then you got these other Fibonacci's along the way and the macro. So if we do this, we have the big picture and the small picture scenario. So those that are interested, I can share this with you. If you look at this chart, if I was to just close all these, so if we have this, if you want to look at this chart, and let's actually go for the weekly, this will give you an idea of what's going on. And you'll see that there's a lot of confluence with this. Towards the end, I'm going to talk about the 5.3 factor. That's someone's come across it that's really good, and I'll share that. So basically using 0 and then using this previous 1, you can see that the 1.414 was 2017 top. And if you look at this, Actually, just let's hide that one for a sec. You can see that the 1.618 was the top. So I was using, if I get rid of that, I was using this to find the top, just the 1 and the 0, but it did go higher, and this sort of explains it. So these macro Fibonacci should come into place. Like you can see how this was the meat of it, 618, and so on. So using these Fibonacci, so I'm looking at the macro, and then what I go do is, no, I didn't want that. Then there's a local Fibonacci pullback scenario. So we have confluence there. Let's see, where do I do that? That's my one. So if I was to put the levels in there, you can see at the top to there, 1, and roughly the 1.618 was there, and this was a bit further down. So just populating it, just looking at Fibonacci all the way through, you get this structure, Fibonacci all the way through. And then you see the big ones, big fibs versus the small fibs, and then you can make decisions on those. So like the 0.302, this one's the bigger fib macro picture, and then you got the micro ones. So the macro ones are key levels. Yep, these are all key levels, and you can see that. So, and this one's sort of the medium macro, and they have their role, and so on. So currently, the 1.272 is acting as resistance, if that makes sense. We can get rid of those, and I'll share that for you guys in the description to get a copy. All right, next chart. So we've got the CME gap, so I'm mindful of that. Do we have any more gaps? We have a little gap here, just recent. Okay, interesting enough. So we have a gap there as well. We don't have any other gaps above, but we've got this big macro gap here, which is about 20K. So it would not surprise me that we come back down. My thinking is that if this is a bearish structure, and I'm seeing the initial phases of this was head and shoulders, found our level. That level was probably the golden ratio. Give us a sec. Yep, that was the golden ratio there. And as you can see, that played out, found supports. Now we established this trend line. If we get a rejection there and we come back down, this is likely to be a support area. And we can probably even justify that with this level here, the 0.382, from there to there with this structure. But you can see that if this is a broadening wedge, it's very close to, it can be a reversal. Yep. So if these are A, B, C, D, E, make it white. That's on my mind. I'll be watching it. But if that plays out, then I got this scenario where this is more bearish, and this also could be. Remember, I was talking about the Wyckoff structure. This could be a distribution or reaccumulation. You can't say. Don't know. If it comes down to here, then this is going to be not nice. That's going to be bearish. And then we've got this level as resistance. Then we've got this level as resistance. So it could come down like that anytime. So this is a bearish structure from another perspective. And the problem is we don't know how to look at it until it's always later. Okay. So I just wanted to put the CME gaps out there. Now, when we look at the SP500, we did get a good rejection on these levels, as you can see, with the 200, with the weekly 100 SMA. And we've got the 221 monthly SMA as well, and that we've talked about in the past. That is a kiss of death. So we've got another rejection. and we are coming to I'm looking for a support and a bounce. Hopefully it gets past that. If this could continue just going sideways, potentially, then either up or down. And that's why we're going to, if it gives us enough time for Bitcoin to hit its target, 30K to 32K is probably what I'm looking at as a likely level of a major resistance. Okay, so if we get above 25K, then 30 to 32K. Would that give us an ability to get to those targets before it drops? There is a bearish scenario. I can't see this going bullish. I just don't see that, but I could be wrong. And if we look at the US dollar against the others, US dollar or US dollar index has upward momentum. We are at a resistance point now, so we had a few days of a nice run. This level is resistance, so I do see this probably pulling back. I could be wrong, but there is a bit of Instagram bearishness coming into it, and the MACD, I would like to see the MACD come down a bit and maybe cross over again. So the US dollar is looking strong, unfortunately, for crypto. And when we look at the other charts that I had, where is it? 3. Here we have the Aussie dollar against the US, and we might get a bit of strength from the Aussie dollar here. That was what I posted. We might get a bit of a bounce here because of the Fibonacci level, 618, and the Fib fan. So we might get a bit of a bounce, but then another rejection, which shows you, I could be biased, which shows you that the US dollar is going to be strong. This is the US against the yen, and it's killing it as well. It's also at a Fibonacci level, moving average area of resistance. So we might get a bit of relief for crypto. Tether, we'll always use the tether as an indicator, and I've had this RSI for a while on the daily. It is still bullish, but we have come to a resistance level, and tether might come down. So if tether comes down, that's good for crypto, but we haven't seen it. This is a level. We want to see it go below that level. It's not there yet. You can see that that's previous resistance. It might use as support and then hit there again. So this is the short-term bearishness for Bitcoin, shorting. And so we might that's what I'm hoping for. So we're in this range, and this range is going to determine basically if crypto is bullish or bearish. If this goes up, that's everything bearish, and I'm looking for, I've done this before. Give me a sec. If you look at that channel, if this is a distribution for Tether, there is a number of models in there. One model is that it does find support and then back up again, and that might be the top for Bitcoin, the local top, and then we get a pullback for Bitcoin, and then we get a topping formation. So this was my wave 3 to 4, and I'm looking at this as a macro distribution, and if we get to that level, that is the definite bottom. We had a double top here. I could be wrong, but I do feel like there might be more to it down the track, especially if SP500. So if I'm proven wrong, if it goes below this, this is the bull market for me. When we go below this, this is the bull market. It might come back up, but this is confirmation that we start the bull market, and that will be the top. This is where we had the previous tops, and I'm thinking we have a various. So you can see that Tether dominance is, as the bull market continues, we have less and less dominance on Tether, as most Tether will be into crypto. Ethereum. So I went long with Ethereum, and very much like Bitcoin, it's stuck. I thought this might. We had this, and I usually count 3, 1, 2, and this is the third one, ever so small. So that was a cycle. and you can count that as an Elliott wave perspective. And we have the break. So looking for accumulation and the breakout to the upside, continue, or rejection. And it's not the best at the moment. Looking at, let's see if we've got anything else we can look at. Link is not the best. Link's getting major rejection. As you can see, that moving average. What's this one? This one is this one here. So that's a 200 on the daily EMA acting as resistance, and link is it's probably at the last stages, but you can see where the moving averages became major resistance, double top, and then we come back down. It's not nice, bearish, because we want to see hold above it. But anyway, that's the case. Here's a few charts. BitGert, that break up really surprisingly strong move, and is still holding. The rest are doing crap, so they pull back a fair bit. We've got TrueBit. TrueBit's also waning. This is an assumption at the moment with Bitcoin that this might be a channel. There's no proof of it yet, but that's a theory at the moment as well. So we'll see how that goes. FTM, nah, looks like distribution. Matic is the one that's looking strong. Where are we? Here we are. No, that's not Matic. Matic is the one that I'm positive about. Wouldn't surprise me for this to come down as well, but that's still all right. This is a macro continuation reaccumulation structure. It's not like the others where they're distribution. It has not broken the structure, so this could be a secondary test or spring. A spring could be here as well. So if we went bearish, this is a perfect place to buy to go long. I don't think it will ever come down to here, but if that's the possibility, that's wave. So we're looking at wave 3 to 4. Can wave 4 go a bit lower? Yes, it can. But at the moment, I'm pretty bullish with it. Going on with Matic. And that's it, guys. There's not much to talk about except for the US dollar and this. This is going to dictate what happens to crypto. And we'll know in the next few days. So I've given you the local perspective, levels of interest. We are getting a bit of rejection though, aren't we? Okay. There we go. So there's a bit of a bearish candle. That's a 4-hour. So it's not the best shape. But anyway, please give me a like and share. Come and join our Telegram group. And I'll talk to you soon. Cheers.